The company being analyzed today is Borana Weaves Limited. This is a company which manufactures fabrics and yarns, but for other businesses. So this is a B2B or a business to business. So today we're going to analyze the company, its financials, what it actually does, and its future growth plans. So let us begin. So first we have a market cap of 782 crores. So it's a pretty small cap company. Current price of one share is 297 rupees. Book value, that is assets minus liabilities, value per share is shown here at 92.3 rupees. The price to earnings ratio is 15.3 times. High return on capital employed of 41.2%. High return on equity of 60.3%. Screener.com does show these numbers, but they are not always accurate. But let us just take them as pretty accurate. Company has high return equity and high return on capital employed. Then comes the profit and loss of the company from 2022 all the way to 2025. We will go there in a second. We have sales in crores. We have operating profit known as EBITDA. Pay attention to the operating profit margin. This will tell us what kind of profitability of a company we are dealing with. And at the bottom, we have the net profit. So in 2022, the company reported sales of 42 crores. Okay. 2023, it jumps up to 135 crores. 3x's. It triples, more than triples in a year. Then 199 crores in 2024, fiscal year 2024, which is still a good growth rate. Then March 2025 or fiscal year 2025, the company reported sales of 290 crores and operating profit or EBITDA of 63 crores with an operating profit margin of 22%. So it's a nice margin. That's a really nice margin, 22%. And finally, we come to profit after tax or net profit of 40 crores. You can see how much has the profit grown, the net profit grown. So, compounded sales growth over the last 3 years has been 90%. TTM means the last 12 months. 12 months. We are in December. So, right now, December, 12 months back is December of last year. So, kind of like that. So, TTM trailing 12 months showed 46% growth in sales, while compounded profit growth has been even higher, showing that the company has gotten even more profitable, 183% and 73% last 12 months. 183% compounded sales profit growth is very high. And return on equity, 3 years ago 69%, last year was 60%, kind of declined, but it's a really good return on equity. I think return on equity is one of the most important things in, I think, valuing a company. Then comes the cash flows of the company. We will pay attention to cash from operating activity. So March 2022, negative cash flows, minus 8 crores, then positive of 7 crores, then 22 crores, then 23 crores. So last 3 years, a nice rise in the cash flows. Operating cash flow is positive. That's a good thing. That's a really good thing. Now, company overview. Let us go to about us. So, a leading producer of unbleached synthetic greg fabric. Now, what is greg fabric? Greg fabric is this very unprocessed and raw fabric. Okay, it's unprocessed, it's raw, it is not bleached, it has no color. That is why this kind of fabric serves as a key base for dyeing and printing across fashion, home decor, technical, and traditional textiles. So, because it's unprocessed, it has no color. Now you can have designs on it. Now you can color it how you want. And that is why it serves as a base. And it can be used where fashion, home decor, technical, and traditional textiles. So, these are the industries it can be used in. Fashion is a big thing, of course. So, yeah, it has four advanced manufacturing units. All right. And currently they have a unit 4. The fourth unit has currently been operational, like it's very recent. So it's currently being ramped up, the capacity is being increased and all of that. So four manufacturing units in Surat. The capacity utilization of fiscal year 2025 was 80.93%. Very nice. They got 20 texturizing machines, 10 folding machines, like folding the cloth, and 7 warping machines. And as far as I can understand, if I remember correctly, Greg Fabric has crisps and folds, if I'm correct, on it. Like foldings, like crisps and all of that. Then total installed capacity, I think including unit 4, is around, what is this? 33 crores, 95 lakhs, and 52,000 meters of installed capacity. That much cloth, like fabric, you can actually make. Okay. So, yeah, let us move forward. I think last statement we can actually read is this. 348 and out of 1048 installations in Unit 4 is funded and fully completed. So Unit 4 is the latest unit. So out of 1048, I guess, planned installations, 348 have been completed. So I think the rest are yet to be completed then, no? They're yet to be completed. Okay, now let us move forward. We're not going to read about the journey right now. There got two segments. Okay, one we have greg fabric, second we have pty yarn. So pty yarn is polytextured yarn, I think so. So 87% of revenues in fiscal year 2025 came from greg fabric, and pty yarn contributed around 12% of revenues. So these are the two main revenue segments. Then product portfolio is again this greg fabric and then pty yarn. It is processed from POY, it is durable and cost effective, and these are the applications. It's very important. Now we can see the variety of places and sectors it can be used in. So we can kind of try to imagine how many customers it can actually have, the wide variety of markets and customers it can go to. So home textiles, for example, bed linen, upholstery, upholstery. Then apparels like shirts, trousers. Okay, apparels is big. Industrials in the form of tents, waterproof fabrics, technical textiles. Okay, RPU coated and waterproof fabrics. Okay, whatever that means. So four facilities. I think all of them are in Surat. Then manufacturing overview. Now this is good. Okay, so first we have Unit 1, and you can see the dates and the utilizations here. Then we have unit 2, unit 3, high utilizations here. I think it's showing the period, the number of months, meaning the number of months it has been operational. And as you can see, like this has been like 12 months, 12 months, 12 months. You can see unit 4, it's 4 months. And 30th, 39, 2025. What is 39, 2025? The ninth month. I forgot the ninth month. September? Yeah, the September. Yeah, September. So September 2025, 2 months and 47% utilization. See, the capacity utilization is only 47% compared to the other utilizations of 69%, 83%. So a lot of utilization is still left. A lot of revenue is still left to come from unit 4. So expansion. Then clients, example, we got Nirankari Textiles, Varun Textiles, Ambaji Fabrics. So it's a B2B company. They're making these fabrics, Greg Fabric and PTY yarn for other companies. So they can make their own things. Then industry overview, I think we will come at the end actually. Industry overview will come at the end. So let's look at the latest earnings. In the latest earnings, the quarter two alone produced 95.5 crores of revenue. Now, EBITDA margin, EBITDA margin of 23% for the latest quarter. Okay, 21 crores EBITDA. Profit after tax and profit after tax margin. So latest quarter, profit after tax reached 16.65 crores and 17% profit after tax margin. Earnings per share, okay, 6.31 rupees. All right. Doesn't tell if it's accounting for dilution of shares, but so 17% was the latest margin for EBITDA, sorry, for profit after tax. For profit after tax. And let's take a look at this. So fiscal year 2025, the return on equity was still high, 45%. Nice. Return on capital employed was not as high as Screener showed. The company is showing 31.8%. I think Screener was showing like 60%, but that's still a very good return on capital employed. Current ratio is current assets divided by current liabilities. Current here means less than 12 months. So current liabilities, you can imagine loans and all of that you have to pay. Money you owe to others, you have to pay to others in around 12 months. So like suppliers, then loans and all of that. So higher this ratio, it means that current assets are becoming way larger than current liabilities. This can be good or bad. It depends on the situation. I guess you can take it as good. So 2.62 times debt to equity, lower this the better. And you can see debt to equity is declining. That's a good thing. Stock turnover ratio, is this inventory turnover? I wish I knew. I wish I knew. Now way ahead. Now way ahead. What is the future plans of the company looking like? So now few things. Strengthening leadership in synthetic greg fabric segment. So they have a focus. They have this narrow focus and one market they're looking at. Greg fabric, synthetic greg fabric. All right. Now look at this. Their medium term vision. The medium term vision is to double capacity in the next 24 months. So this was released in around September 2025. So in the next 24 months, 2 years later, they want to double capacity, which brings us to a capacity expansion of roughly 41.21%. It's a bit of a math, but around 0.41, you multiply that by 100. So 41% CAGR growth in capacity they want to achieve over the next 2 years. That's CAGR. Okay. So very important. Medium term vision, doubling production capacity. Then Unit 4 has been operational now, is now operational. It's expected to fuel growth and margin expansion. Margin expansion, they're going to even increase the profit margins. So from like 22% EBITDA margin, they want to go 23, 24. Profit after tax margin, latest quarter of 17%, they want to go to 18%, maybe 19%. Nice. Then on track to become zero debt, on track for zero debt by fiscal year 2026. So we are currently in fiscal year 26. So by the end of fiscal year 26, that is March 2026, they want to have zero debt. That's very good. Then they're expanding exports by focusing on high value synthetic fabrics. Then they're introducing a new product, RPU coated fabrics for jackets and technical wear. Okay, so higher premium stuff and a new product. That's a good thing. New products. Okay, adopting automation and water efficient sustainable practices. And they're exploring diversification, exploring right now, deciding, thinking into spinning and advanced fabrics. So capacity expansion, margin expansion, zero debt, unit 4 fueling growth, then focusing on high value stuff. That's a good thing. And the focus is on leadership in synthetic grade fabric segment. All right. All right. All right. Now let us go to, yeah, this page. Yeah, this page. So capital expenditure. So unit 4 expansion to unit 4, a planned date is around fully completed by October 2025. All right. Then what else? Okay, expansion progressing well and on schedule. All right, and they are having this zero liquid discharge sustainability project. So I think this is for their internal thing to save more water. Like they're recycling 640 million liters of water annually. So yeah, this is for sustainability. Okay, that's nice. Then okay, that's it. Okay, that's actually it. There's nothing more to show. Hold up. There's nothing more to show. Okay, so good cash flows, not exactly the best cash flows, but what else can we show? I think a few things can be shown regarding this. So the home textiles are racing on favorable economic conditions. Okay, so Indian exports, home textile exports, grew from $5.3 billion to around $8 billion in 2022, 7.1% CAGR. So the home textile industry is expected to grow at a CAGR of 8.9% from 2020 to around 2032, growing from 700 hold up, growing from $10 billion, sorry, $10 billion to $23.32 billion. So as a like a total addressable market, that's a pretty big market. Yeah. And okay, home textile industry, what else? What else? Strong fundamentals and policy support aiding the growth of this company. First is growing demand by the population, of course, but rising demand in exports. Okay, is growing domestic and foreign investment. All right, and look at this. 100% foreign direct investment is allowed by government in textile sector, and around $140 billion of foreign investment is expected. That's a good thing. Then unlocking growth in the polyester yarn industry. Now, polyester yarn PTY is around 12% of revenue, so you can read this. So India produces 4.5 to 5 million tons of synthetic fiber annually. Polyester yarn fabric, 2.53 million tons were produced in 2024, and it's expected to grow at a pretty small CAGR, 3.2% CAGR. This production capacity expected to grow to 3.06 million tons by 2032. Okay. And anything more? Okay, I think that's it. So Borana Weaves, a big capacity expansion, and Unit 4 is still expected to be fully utilized. Yeah, the capacity utilization fully, Unit 4 is expected to go up. And yeah, that is it. 40% in that Unit 4 expected to go to higher. And my fault, yeah, return equity screen was showing as 60.3%, and return capital employed showing as 41.2%. The investor report showed this was around, I think, one of them was 45%. I think ROE was 45%, and ROCE was in the 36-37%, which is still very nice. Very, very nice return on equity and return on capital employed. Let us see how Boriana Weaves does in the future. Let us see if they can improve their cash flows a lot in the future. Growing from 23 crores. Let us see how fast they can grow. And actually, we can see one more thing, the profit and loss, right? Let us compare the net profit to the cash flows. So 1 year was negative, but after that was positive. So 2023 is 16 crores. Then 2024 is 24 crores. 2025 is 40 crores of net profit. Comparing this to cash flows, we see that 2023 was 7 crores of cash flows for 16 crores of net profit. Okay. So half of net profit. 2024, very similar, like 24 crores of profit after tax and 22 crores of this. But 2025, 40 crores of like net profit and 23 crores of cash flow. So will they produce like half of their net profit as cash flows? That's not the best, but not the worst. At least it's positive. Huh.